This may be provocative, but in my opinion, a lot of asset protection advice you hear is just people who want to sound smart as a way to cover up their fears of actually having to diversify. Today, I'm going to tell you the truth about asset protection. There are a number of different things that you can do to protect your assets. Some of the bigger ones are just general diversification, holding more than one asset class, more than one stock, taking money from your business and investing in something different. Why? Because companies fail. Geographical diversification, whether it's in a business, opening up and selling to other markets because there's sometimes a recession in one and not in another. Or diversifying into different countries because different stock markets could be up or down at one time. You want to protect your assets from potential adversaries because people are greedy, and certain countries like the United States are very litigious. People want to take your money. You might want to protect yourself from one jurisdiction. The government could come. Who knows? Throughout history, governments have gone against their people. If nothing else, you just may not trust your government one day. And you might just want to protect yourself against different currencies. History shows some go down, some really go down. For me, asset protection is all about diversifying geographically. I like to say there's a geographical solution for every problem. The reality is some economies are up, others are down. Some countries are up, others are down. And the momentum in the country that you may be living in where you're watching this, if it's a Western country, is probably heading in the wrong direction, whereas countries around the world, emerging countries, their economies are up. Other countries, their freedom is up. The government is being more and more open. They're taxing less. They're taking less. International, to me, is the only way to protect your assets. And so when I look at people prescribing entirely domestic strategies for asset protection, where, yeah, I have exposure to Asia in my stock portfolio. I have an ETF. It's US listed or it's Europe listed. It has a US or European perspective, not a local Asian perspective or local African or a local Latin American perspective. It's just this kind of local, like, bland version. It can be taken from me at any time. It can be taxed according to the rules of where it's domiciled. That's not asset diversification, and that's not asset protection. And when it comes to asset protection structures like trusts, I see people, for example, where I was born in the United States, who they set up entirely domestic structures and then think they're going to be covered. I also see people who take it one step further, setting up international structures, let's say a trust in the Cook Islands or the Bahamas or other countries, and then they put entirely domestic assets in the trust. Who knows what could happen? If it's entirely domestic, you're at the whims of what happens in that country. Let me tell you a story. Read the entire case one time of a guy who set up a trust in a UK territory and then proceeded to put real estate that was in the United States and stocks that were held in a brokerage account in the United States in that trust. And when the government came after this person, they said, well, you know, we don't have to follow the rules of this trust because, I mean, we're the United States. We think we're the best. And so we're going to take that property and we're going to be forced to be sold. And basically everything was taken out of the trust. And it was like as if the trust didn't exist. Now, let me be clear. I am, as you know, the goody two-shoes of the offshore business. I think you should do everything properly. If you live in a country that has taxes, you should pay your taxes. And if you don't like paying your taxes, then you should find a country that you can move to and follow the proper procedures to exit your country and enter that other country as a tax resident. If you have, assets, you should protect them, but obviously you should do the right thing. Legitimate businesses get sued. Legitimate businesses get investigated. And so do illegitimate ones. Be legitimate. That's my suggestion. But what we know is that even people who do everything right have someone gunning for them. I'm reading Patrick Bet-David's book right now, Choose Your Enemies Wisely. You're going to have bad stuff happen to you. And his suggestion is, don't focus on the small enemies that aren't worthy. Don't focus on the person who's just going to leave a bad review no matter what. The employee who's going to attack you, the person who's going to smear you. Those enemies aren't worth it. But you know what? They are worth protecting your assets against, because anybody can say anything, anybody can come after you, and you want to make sure that there's actually a legitimate case before they can take your stuff. But if you have everything in one country, those assets can be frozen while they figure out who's right or wrong. If for some reason something goes the wrong direction, they could just entirely dismantle whatever structure you put together. Cards on the table. Here's my philosophy. It is true in the last couple of years, the S&P 500 in the United States has beaten some of the emerging markets. Now, some of the investments that I'm in, because again, they're on the ground and people are more attuned to picking particular investments in emerging and frontier markets, those have outperformed, in some cases, the S&P. But just for the average investor in the Western world, the S&P 500 has won. There was a time not that long ago where emerging markets were actually outperforming the United States, and I think that time will come back, where Western countries are outperformed, if you know what you're doing, by emerging markets that are heading in the right direction rather than the wrong direction. So that's what I believe. I'm from the US. I don't think that it's going to be the best place to invest going forward. I also think that the US government is a large organization that enjoys having power, that is losing some of its power as organizations like BRICS, all the kind of stuff where their pushback on the rest of the world is finally coming back and they're getting bitten a little bit. And they don't like the competition. And they're not going to be easier to deal with. And they're going to become more and more and more difficult. And they're going to try and take more and more of your stuff. Heck, even right-wing politicians now are saying, we should take some of your stuff. So I don't necessarily trust the government. And I don't necessarily trust that the markets that have been good performers at times are going to continue to be. So let's break down a couple scenarios of what I would do if I want to not only earn some decent returns on my investment, if I want to be diversified just for the sake of whatever happens in the world, one goes up, the other goes down, but also that, if the worst happens, I have some asset protection. Here's what I would tell you. If you have a foreign trust plus local assets and you're living in that country, you don't really have much protection at all. Now, again, we have the caveats that you should pay your taxes, you should be a good person. But again, you become successful, somebody comes and makes an accusation, who knows whether it's true or not, and heck, sometimes they win. When I see some of these judgments in the US, people are winning like $100 million. I say, where do I sign up to get $100 million? Right? You want to say some nasty stuff about, hey, fine, pay me $100 million. I mean, some of these judgments you get are just out of control. So if you have a foreign trust, local assets, and you live there, hey, we're going to put you in jail if you don't do what we want you to do. Or we're just going to take the assets because they're right here. If you have a foreign trust and a foreign asset, well, that's better, again, because I would like to be diversified. But, somebody can't come after you and just say, well, the asset's right there. I'm going to argue the trust doesn't exist, or, trust, the holding company doesn't exist. I never really thought about this for many, many years of my life. I just wanted to have stuff all around the world. I just thought that Asia, for example, was going to be a much better place to invest in the years to come. I've spent much of my adult life visiting Asia and now living part-time in Asia, and I see the potential, and I'm always looking for places that have more potential. I mean, you look at my portfolio, one of the best countries in the last year is India. Indonesia's done relatively well over the last couple of years. Obviously, China has not done as well. But I see some good values there. Like, I'm a believer that Asia in particular, by the way, Latin America has also done very well in the portfolio. I mean, that's also been one of the big ones that's won. And so that's where I started. I wanted to live in other countries. I wanted to enjoy what each different part of the world had to offer. I learned how I could, sell to new markets in my business by being in those different places. I, purchased properties because I wanted to live in different places around the world. I was aware of asset protection, but I more thought about how do I structure this for tax efficiency. But now, as I associate myself with, some very successful people, people have accusations hurled against them. And you know what? Most of the time, the stuff doesn't stick. I'm not talking about, they're being, hauled into criminal court. I'm saying, someone accused them of something civilly, or, they got, wrapped up with the wrong people, whatever. And I'm saying, if you did something wrong, you should pay the price. But if you didn't, there's too much guilty before proven innocent. And so the stuff that I was already doing for my own personal interest, I think is also good for wanting to be diversified and protect your assets. Real estate in a lot of countries is hard to put in a foreign trust. In some countries, they want you to own it in a local corporation. And so the corporation would have to go to the trust, and then the corporation has different requirements. Sometimes it can get a little bit laborious if you don't have a full-time team handling this. Even for someone like myself, I have people that would help me do it. It's just a lot of extra work, and it's just kind of not worth the risk. So I don't necessarily hold everything. In fact, I don't really own much real estate in a foreign structure. However, just having it in a different country adds a level of diversification, adds a level of protection. And so, you don't even necessarily have to have a trust in every circumstance. But for things like equities, for things like metals, for, intangible assets, and for some property, depending on where it is, something like a trust or a trust with a holding company could be a good structure. So there's any number of different structures depending on what kind of assets you own. Money in the bank that you hold in your own personal name or in a domestic trust could be in a foreign trust. Keep in mind, this doesn't change your taxes, by the way. And if you live in the U.S., live in Canada, live wherever, this is not necessarily a tax planning maneuver. If you want to save taxes, that generally involves moving not just the assets, but you're behind somewhere else as well. So you can reduce your taxes and get more favorable conditions for the assets in the trust. But the trust itself is generally rather neutral. And so there are actually countries that will, if you have enough wealth, offer you immigration benefits or other benefits for opening up, let's say, a family office there. Generally a trust, the Cook Islands, you're not moving to the Cook Islands, but it's a very robust jurisdiction, probably the best, for storing stuff that you own. And I think that stuff should be somewhere else. Again, it's diversification of which assets are going to do the best, combined with, how do I make sure that I'm protected? And by the way, I'm not saying everything you own should necessarily be in that structure. I'm not saying you should make it impossible for people to get any money from you, but I certainly want you to protect yourself from going broke because of some, crazy accusations, or because, you said the wrong thing and now someone's owed $100 million. That just seems unfathomable to me. And by the way, some of these issues are very uniquely American issues, to the point of, oh, well, don't be a bad person. Well, what's a bad person if only one country issues some of these crazy verdicts? Does that mean you're not a bad person if you do the exact same thing in the UK or in Germany or in Sweden? So to me, this is a function of some of the governments and some of the systems around the world that have totally gone awry. And you want to protect yourself, that at least you can fight back. At least you can defend yourself. At least you can control enough assets to where, you don't have to worry about paying for and mounting a vigorous defense. Again, this is not really about anything that exists in the criminal realm. This is more about civil stuff. This is more about just, governments coming, you know what, we're going to take your stuff. You want to have control of your assets. I'm not on the extreme side of control, of own nothing and control everything, but I do think if you're going to have an asset protection structure, really who I'm talking to here is you already have a trust. You already have some kind of system in place, and that system could be better. You think that some domestic system is going to save you, when the reality is what you need is the same level or better of asset protection, but more diversification with what goes in that structure.